All right, good morning, good evening, wherever in the world you might be watching from. It's MPC Decision Trading Day right here in Lagos, Nigeria. Today, we'll see what the central bank leadership has up its sleeve to tame stubbornly high inflation in Nigeria. But before that, let's get to the top stories that set your agenda now. We'll see oil prices fell in early Asian trade today, with investors anticipating higher for longer U.S. inflation and interest rates, depressing consumer and industrial demand. And we see WTI, that was able to rise above the $80 mark. That was early part of yesterday, but now we're below $80, $79.72 a barrel, 0.01% down this morning. Brent still maintains there, $83.34 a barrel, also down 0.01%. So investors still trying to assess what's happening with supply and demand issues right there. But both benchmarks fell less than 1% as the U.S. Federal Reserve officials said they were waiting for more signs of slowing inflation before considering interest rate cuts. Let's get a check on the FX market now. NAFEM traded on an active note with the Naira appreciating by 28 Naira 34 kobo against the U.S. dollar to close the trading session at 1,468 Naira to the dollar. Below that 1,500 psychological level, 1.89% rise is what we have there. And we also see NAFEX also closing strong, 1.85% at 1,502 Naira 63 kobo to the dollar. Analysts anticipate the central bank will intervene in the markets that's within this week. And also, the Director General of the Debt Management Office, Mrs. Patience Oniha, states that the domestic securities market continues to be a primary funding source for the federal government. Mrs. Oniha highlighted this during a key presentation to stakeholders, where she detailed the funds raised to date through domestic borrowing and securitized ways and means. Take a listen.
With your support for the new domestic borrowing and the 2024 budget, which I said was 6 trillion naira, we actually have raised 4.5 trillion naira out of that. So it's not our money. You gave us money, and we'd like to thank you for that. For the ways and means, the last time we talked about how we fund it, your own money, excess cash reserves. Since then, a lot has happened. So out of that 7.3 trillion naira that the National Assembly approved for securitization, we have raised 4.905. So I'm giving you figures as at Friday. We have raised 4.905. So there's still a balance in both cases. So let's see how the rest of the year goes. But let me quickly add that the Nigerian domestic securities market remains a major source of funding for the federal government, really. And we cannot but appreciate the work that we have done collectively all these years. That's why, COVID came, countries couldn't go to the international capital markets. The markets were closed anyway. But we were able to raise the full amount and even more that we needed to fund the budget. And that has been the case. If you think about it, last year we raised 7 trillion naira, as new domestic borrowing. So it speaks to the size of our market, the resilience, and then the sophistication, really. That's not the case for a number of countries in Africa. Some of them don't have a yield curve that extends to 5 years.
All right, so today, Nigeria's Monetary Policy Committee will announce a new benchmark lending rate or retain the last one. Question now is, will the Hawks come out to play again? We'll find out. Join us now is Mr. Bismarck Ruwane, CEO, Financial Derivatives Company. Join us via Zoom. Great to have you on the show. Good morning, sir.
Good morning. Thanks for having me.
Fantastic. So the battle to tame inflation continues in Nigeria, but looking at the previous inflation numbers for April, is it enough to tilt the MPC dovish?
Well, I think we're only speculating. The point is that the MPC is likely, and I use the word likely, to increase interest rates by at least 100 basis points. Why are they doing this? Because the lag between when the policy measures were taken 2 months ago and now, we've not seen the full impact. But what we've noticed, though, is that the rate of inflation increase has actually slowed. In other words, the rate of inflation is actually increasing, but at a slower pace than it was earlier. If it continues like this, and if you take into consideration that month-on-month inflation is actually declining, then it is only fair and rational to expect that interest rates will increase this time and that inflation will become under control. However, the other things that go into inflation. We notice that core inflation, which is more structural, is actually not, is increasing and increasing at a faster pace. Two, we have the big elephant in the room, which is the minimum wage, which has to be settled very shortly. If that comes in, then your inflation expectations and assumptions begin to change dramatically because wages are a critical element in the inflation equation. So we have to take all of this into consideration. But it's a critical time for Nigeria in terms of knowing the limitations of monetary policy and knowing the total impact of fiscal policy, which is taxes, revenues, and expenditure. That's what you need to see. But at the end of the day, you'll see that prices of commodities are actually, in some cases, beginning to decline because we had actually overreacted in the past. But remember, this is a period when we always call, even though you say sell in May and go away, we also know you buy on the rumor and sell on the news. That's where we are. It's rumor until 2 o'clock this afternoon when we know what the central bank will do. So you can buy now and then sell after 2 o'clock if you want to.
Right, we're definitely counting down to that. But let's look at the Nigeria's GDP growth now from 2023. We see the third quarter came in at 2.54%, while the fourth quarter rose to 3.46%. But we don't have the first quarter 2024 numbers. But with 600 basis points already, with the rate hike already in the first quarter, do you think the MPC have enough data to make a decision at this point?
The GDP numbers are going to come out on Friday. I would expect that by now there'll be indications the Central Bank Research Department would have had a feeling as to what it's likely to be. But irrespective, growth is a fiscal objective. It's also monetary policy is to ensure that there's macroeconomic stability and that price levels are not, you don't have an overheated economy. Having said that, there are other variables that go into this macroeconomic equation, including unemployment. And so we are, for now, the MPC will be focusing mainly on price stability, looking at money supply growth, looking at the exchange rate impact and pass-through effect on domestic prices, and seeing whether the banking system is able to withstand the shocks of higher interest rates. That will be the focus. The GDP numbers are still there, they're in the rear mirror, but they are not the major and primary goal of central bank in Nigeria today, because the central bank has said categorically that our goal is to ensure that there's price stability and also to carry out orthodox monetary policy, not unorthodox monetary policy. That's what you're looking at.
All right, let's look at another issue before this MPC at this time, the Naira. We see it gained yesterday. Is it the CBN's interventions from last week, about 3 interventions we saw from the CBN playing into this week?
No, I'm not sure. I think that there's a lot of expectations, false expectations for that matter. Some say that the central bank is intervening to ensure that the currency doesn't go across a particular level, especially when there's a 1-year anniversary of this administration. So it has to look good. But at the same time, we are seeing that the parallel market is trading at about 1,500, which is not bad compared to where we were about a quarter ago. So I don't think trying to speculate on the exchange rate and trying to catch a falling knife more or less is going to do anybody any good. The truth that effective demand for foreign currency in Nigeria puts the fair value today at about 1,400, 1,500. And that's the range in which we'll be trading for now. But what you must bear in mind is that the difference between the parallel market and the official market, which used to be as wide as 25, 30% in the past, is now as narrow as 1%. So that's fair enough. Also, the backlog of some of those, the arrears are being settled gradually. And fairly, I think that the important thing is that there's no supply of dollars in the market to the point that it can make the Naira begin to appreciate. If you know, what we are seeing today, oil sales are down because we've actually pre-sold some of our oil. Diaspora flows and hot money that are coming in, foreign portfolio investment flows are disappearing. So it's a tough one, but I'm not pessimistic about where the Naira is going to move. I think the Naira is going to trade at current levels for at least the next month or two.
Looking at another sector that's heavily impacted by the FX market, we're seeing diesel prices right now about 1,200 Naira per liter, cheaper than what we're buying in the first quarter. So are we out of the woods yet when it comes to diesel prices?
Yeah, thank God that Dangote Refinery is producing and selling actively at about 1,100. So we scanned the market yesterday. It's 1,200 across most of the MRS and Mobile. Corn oil is selling at a slightly higher premium. But generally speaking, across the country, we are seeing it about 1,200. That is significant in the sense that diesel is used to power generators. Diesel is used to power the trucks that carry food from the rural to the urban areas. Diesel is also used by the bakeries to keep the bread, because you cannot rely on public power supply for the bakeries. So it's a very, very important input to keep prices at the current level. It had almost a 10 to 15% impact, the price of diesel on general price levels. So having said that, that is one of the factors. When you put it all together, you see why the economy is showing some signs of interim stability. I want to use the word interim stability, is that because the interest rates have increased, so the marginal propensity to consume and buy dollars has reduced. Because the price of diesel has reduced, then the pass-through effect of the knock-on effect of higher diesel prices on lower diesel prices on the economy is having an impact. Then, of course, we're seeing money supply growth, which is being targeted, and I think the numbers will come out later today. So when you put all of this together, even though your exchange rate is at about 1,500, the question is, what if you didn't do these things? The exchange rate would have been about 2,300 or 2,400 right now. So it takes time, and there are lags between when you actually announce policies, when it has an impact, and when people begin to believe it, that it's consistent. So these are the things that are going in. I think that the price of diesel coming down is a major, major boost to macroeconomic stability in the country.
Right, because I remember bread makers were already threatening about increasing bread prices when we saw, diesel prices were high. So hopefully they don't have to raise the price of bread, going forward with these prices, coming down.
Yeah, the price of wheat has actually come down globally a little bit. So the bakers have been making some money, but obviously they lost a lot of money in the past. So it's time for them to have another break. But having said that, the whole thing about cocoa, because we talk about the Forex thing, the European Union has passed a new rule which says that cocoa coming from countries where there's no reforestation will not be bought. So today we are seeing the price of cocoa at about almost $7,000 a ton. And Ghana and Ivory Coast have actually announced 55% increase in the prices to their domestic farmers. There's a lot of instability, but for Nigeria, we're expecting to do 250,000 to 300,000 tons this year. And if that happens, you could see that cocoa inflows into the Forex market could be significant. And the average quality of life and income per capita in the cocoa producing areas of Osun and Ondo State and all the way to Akwa Ibom, you will see that the average income per capita there can be much, much higher than even in the oil producing area. So again, back to the basics, back to the future. We're going back to the old raw materials, and we are benefiting from integration with the global markets. And that's a welcome development, which I have not heard it being announced or discussed publicly in this country. It's a major development and having an impact not only on our Forex exchange rate, but on the quality of life of the farmers in the rural areas of Nigeria.
And looking at the new rules from the EU, definitely is to discourage deforestation, at this time. Do you see the major exporters now complying, with afforestation at this point so that they, get those cocoa pods out?
I think so. We're already seeing that happen, partly in Edo State where there's a reforestation program. They're trying to get trees back. It solves two things. One is, apart from the ESG rules of the European Union, you know that your aridity and the global warming issue is affecting Nigeria dramatically. And part of the banditry and all of these things that are being discussed, it is time that we do this, not just because the European Union is saying so, but we are doing it because it is in our own best interest to ensure that the ESG goals or sustainability principles are addressed. We are seeing that with the compressed natural gas initiative, the electric vehicle initiatives, the lithium initiatives. There are a lot of those things. So this only makes it more compelling that a country like Nigeria has to, one, grow, but also grow sustainably in such a way that it doesn't damage to the environment, and it also helps us to capture some of the benefits which the European Union, the United States, Latin America, and Asia are offering for environmentally friendly policies in the third world.
So do you see a big hit to Nigeria's cocoa revenue with this new rule?
No, the rule doesn't kick in till December 30. That is 2025. That is December 30, 2024 into 2025. Already, the major manufacturers of chocolates, Nestle and Mondelez, are already saying that their revenues are going to be at the hit. And but there are so many issues. I think Nigeria benefits because Nigeria had not fully pulled, not actually exploited fully its cocoa potential. Ghana is doing 1 million tons a year. Ivory Coast is doing about 2.3 million tons a year, and Nigeria is doing a miserable 250,000 tons a year. We could easily scale up to about 500,000 tons. But you know that the variance of cocoa that you plant takes about 5 years, right? And what we're seeing, people have cut trees down to plant cocoa, and cocoa does not help the environment in terms of global warming. So we need to go and plant some more trees in the non-cocoa producing areas, so the country benefits from these initiatives, and also the global warming issue, which is affecting us both, especially in the bread basket of the Benue State and Kogi State, begins to actually we're going to get the benefit of that in the food bread basket of Nigeria.
All right, I guess it's time to plant more trees going forward this time. Thank you so much. It was great having you, Mr. Bismarck Ruwane, CEO, Financial Derivatives Company.
Thank you for having me.
And the theme of the day is still about interest rates at this point. And now we're going to find out the impact of high interest rate environment for startups and fintechs and how they're navigating that environment right here in Nigeria. Joining us now is Dr. Babatunde Obrima, is COO, Fintech Association of Nigeria. Joining me via Zoom. Great to have you on the show.
Thanks for having me.
So talk to me about how this high interest rate environment is impacting fintech startups at this time. Also, we know that they're still having to deal with naira volatility.
Well, definitely. I mean, inflation is a general problem that affects everybody and affects the fintech. I mean, cost of operations is gone higher, so which will affect, I mean, their P&L at the end of the year, because also it's a regulated environment where there's a limit to the charges you can charge. So it's and that's why you see fintechs wants to grow the numbers so that they can use that to compensate for the cost of operations. I mean, so that it balances out. Of course, naira volatility is a big challenge. It's a demand and supply, and like Mr. Ruwane also had alluded to, I mean, supply is low, demand is high, so it's a big challenge. I think that we all need to protect the naira and start to change some things that we do, maybe habits, dress, and things. Let's dress Nigeria and things like that. Let's, instead of buying the $1,000 suits. So I think that it's a huge challenge for us at fintechs, at the fintech ecosystem. Cost of operations it's high, and we hope that the MPC will do something that will help to, reduce inflation. As we all know, it's the whole idea of increasing interest rate um, is to reduce borrowing so that demand can drop. But I think that works better in a credit-based environment. In a cash-based environment like ours, it's a huge challenge, and that's why the rate of the impact is not as fast as we expect, like Mr. Rwani had mentioned earlier on. While you can see the rate of growth reducing, it's because, these factors. We hope that with the introduction of credit corp, that could have a longer lasting effect eventually on rates and how interest rates are used to manage inflation.
Right, and talking about, fintechs trying to add more numbers, at this time. Remember the CBN did direct some of these fintechs not to onboard new customers, at this time. How do you see that impacting them in the short term?
Well, it will in the short term, but I think in the long term, it will be better for the fintechs. Regulators have to do their own job. I think that when you look at regulating a digital space, it's at times things are missed, I guess. So the regulators have gone in there and they say, oh, we've noticed some things, we want you to correct these things, but we don't want you to add new ones to it, sort this out. And then once we confirm that you've sorted out those issues, you can start opening accounts again. So I think it's just a short-term challenge that will be sorted out. And I know that the fintechs are all working, we're all working around the clock. We can deal with some of the observations that the regulators have made.
And we know the fintechs and the startups, they need a lot of funding, at this time. Cost of credit is going up right here, still quite elevated in Nigeria. And I know we import, funding, for these, startups and fintechs. So what's your outlook, for funding going forward? Well,
so funding will still be a bit challenging. We could see it from last year. 2022 was $1.2 billion. Last year was just about $300 million. And that's because even the investors have changed their models. Before they were looking at numbers. Now they want to see the money. They want to see where the profit is coming from. So, and they're more concerned now about governance structures than what they used to do. So we're still going to have a bit of some challenges, but even at that, in the first quarter of this year, about $464 million was raised in Africa, Nigeria leading with $165 million. So, we will see funding, but for me, I always say that it's time to start looking at the verticals. Nobody wakes up and say, today I want to pay Flutterwave or I want to pay into Switch. They're just platforms. We pay for food, for shelter, for transport. So we need to start developing those verticals, the agri-tech, the insure-tech, the health tech, the trans-tech. Every day you go in traffic, you see people fighting with conductors over change, or conductors are merging people with change. We can use technology to drive that, even in these Kia buses and all the other means of public transport. So those are the areas that we also need to start focusing on. When you look at the fact that disposable income, 56.7% goes into food, and the agricultural sector is a place to really look at how do we fix broken chains in the agricultural value chain.
Right, and definitely I know some investors on the sidelines will be looking for opportunities in this space at this time. Are there any opportunities you're seeing that most people are not seeing right now in the fintech space?
So I think that the biggest challenge we have in the space today, and not just fintech, in the financial sector, is cybercrime. So looking at investors, fintechs who are looking at solutions for cybersecurity, I think the investors will look at them because that's a space where everybody's impacted. Banks, fintechs, and not even non-banks institutions. So people hacking into systems. So it's an area I think that investors should look at. Also, the verticals are areas that investors should also look at. Take insurance, for example, just 3% penetration. So insurtech is a good space to look at. As a matter of fact, NICOM has mandated the Fintech Association of Nigeria to work with it so that we can develop a fintech adoption roadmap for the insurance sector. Although that's a 9-month project, but at the end of the day, we think that it will change the insurance industry strategically to be driven sector.
Right. All right, we'll keep tracking those opportunities. Thank you so much for coming on, Dr. Babatunde Obrima, the CEO of Fintech Association of Nigeria. It's great having your perspective today.
Thanks for having me.
All right, so that's it from me on Business Morning. Markets are open today and definitely bracing for that decision from the MPC. That's the third one for 2024. Is it going to be a hike or hold? We'll find out right here on Channels Television by 1 p.m. I'm Ladi Williams. It's bye for now. Back to the Sunrise Daily team.